Hey guys, testing the audio. Can you hear me okay? Anyone in here? So if you're watching this on the playback later, if you're not here joining us live, just some of the stuff I want to go over is obviously talk about our open positions here in Tastyworks, and then we're going to make a run through the stock charts and just see how we closed out the week, talk about what's coming up next week, possible trade ideas, watch list, all that good jazz. And if you guys have any questions for me who are here in the live stream, feel free to ask away. I see a total of 3 people here. Let me know in the chat if you guys can hear me, those of you that are here. All right, thanks. How are you? Wild, wild day in the market, really bouncing back that entire down move and putting in a new all-time high. Nice little pull at the close, but really strong internals all day long. All right, just give me 30 seconds and then we'll just go ahead and get started. And anyone who wants to join later can watch the DVR replay. I'll be back in just a second. All right. All right, so I guess what we will do is start off by looking at our positions here in Tastyworks, just talk about what I've got open, what my plans are going into next week, and then we'll talk about, we'll do a market analysis, take a look at the charts, market profile, internals, all that good stuff. Definitely had an interesting week in the market. So starting off with our open positions here. This one is the futures contract on the S&P 500, the micro contracts I had open, one contract long. Actually had a little bit of a fiasco with that position this week. What was I doing? I was trading, I was day trading. I was meaning to day trade the ES, and I actually, which is the E-mini, which is the more leveraged contracts than the micros. So I was meaning to day trade ES, and I was trying to open a short position, and I accidentally sold this MES position. So I was long one contract at 41.54 average. So just pretty much where I'm at now, about 41.50. And instead of opening a short position and thinking that I had nailed a really good short trade, which should have been about a $500 winner, come to find out I had sold my long MES contract and bought it back at a different cost basis. So that was interesting. So I had to reestablish that position. So I did buy another micro contract there, again, 41.50 average, and I'm cash flowing that with a short with a covered call there, 41.80 strike price. So, overall in that position, green, and we'll see what the market does next week. If we push up over this new all-time high we put in, then this covered call right here is going to be obviously in the money. So I'll have to probably roll that out and up to a later expiration. So right now, the only purpose of this position is just to cash flow, and eventually I want to create a balanced hedge where I would have 10 micro contracts of the ES here long, and then one of the E-mini contracts short. So essentially 10 micro contracts is equivalent to one of the E-mini contracts. So if you short 10 of the micros and you buy one of the E-minis, then you're completely balanced, right? So whatever one goes down, the other one goes up, and effectively doesn't require any buying power, and then you can cash flow both of those positions. So right now that's really the only purpose on this. Yesterday when the news came out about Biden raising capital gains taxes, the market obviously took a huge dump. I sold short one micro NASDAQ, so MNQ. Sold short one of those, and just kind of a hedge against this position here. It's not a perfect hedge though, because you're talking about the S&P futures versus the NASDAQ futures. So I did do that overnight, and then when we bounced up this morning, I was able to get out of that hedge for really, I think all in all, I think I only lost about, let's see here. Need to look at this account. So all of these were hedging. I think it's this one, that one, and then yesterday was that one. Nope, I'm still missing something. Is this yesterday? Nope, that is yesterday. I'm trying to think, was it this one, that one? Okay, so I shorted one MNQ here yesterday at 12:44, and then that's not right. That's not right. There we go. Okay, so I shorted one of the micro contracts on the NASDAQ futures yesterday afternoon as a hedge. And then this morning I came in, and when the market was acting like it wanted to take off, I bought one full E-mini contract on the NQ. And then when it came back down, I went ahead and hedged that position with a full lot of 10 on the micros. And then when it finally picked a direction, I took everything off, and the hedge only cost me $22. So at the end of the day, it cost $22 to do the hedge, but that's fine. If the market was really going to tank, then this obviously this MES position would have gotten hurt pretty bad. So MNQ hedge served its purpose. So that's really not much going on there. So this is the interesting trade, I think. This is on the corn futures here. This is the one that I talked about in my video that I made yesterday. If we go take a look at the risk graph, this is the adjustment that we made to this trade because of the fact that it's, and let me check the chart. Yeah, so here's your daily chart for the corn futures. I was talking about in the video yesterday. We had this macro breakout. This was yesterday's daily candle, and today we're just balancing, just consolidating up here. So it is resting. It is still looking bullish, like it wants to continue higher. So next week, we will probably have to revisit this for another possible adjustment to see if we want to still try to turn this into a profitable trade. We still have time on this. I think we have 28 days till expiration on this. So not really, obviously nothing has changed to this position yet, but we'll come back to this in just a minute after we run through the rest of my positions, because I want to play around with some possible adjustments to this. But as of right now, it's just resting today. We're up $9.37 on the day. And again, we mitigated the risk on that, so that's great. AMAT is a broken wing butterfly. So on this one, if we take a look at this risk graph, basically what a broken wing butterfly is you have a butterfly body and then two wings, and then you take one of the wings and you break it. And so by breaking the wing on this side, we gave ourselves the potential to profit to the upside with no risk to the upside. our max profitability would be inside of this tent right here. And then of course we would lose anywhere down here on this side. The reason that it's structured like this is because right here, our max profitability in the middle of this tent lines up with AMAT's all-time high. So if you go take a look at the chart, right, its all-time high is sitting up here around 145.50. And going back to the risk graph, we're short that 145 call right there with 2 contracts. So that creates the middle of the butterfly. So max profit, if it closed right there, of course, it'd be $1,000, but the odds of that happening are slim to none. But the beautiful thing about this trade is that anywhere inside of this tent, we would have a nice little profit. And if it shoots through the all-time high, we're still fine. We'd still make money. So this one was a debit trade, so I had to actually put money out to put this trade on. I ended up paying $201 to put this trade on. So I'm still trying to find some more credit to sell to finance this trade. I have 2 accounts open, by the way. So one of the accounts has this little purple logo, and the new account that I just opened is a taxable account, has this kind of pink circle. So I'm still trying to find some credit to sell on this AMAT to finance that trade. But I mean, right now we're doing good. We're max profit on the trade is still a long ways away, but we're up nicely on the trade as everything pushed up higher today. So next week, I think with a lot of earnings coming out on the big names, Apple, Amazon, Facebook, etc., that could definitely move the markets. So that's something that, we'll have to be aware of. And I don't really want to get too crazy putting on a bunch of trades ahead of those earnings, and certainly not on those names. So we're gonna have to see how the market obviously reacts to those earnings coming out next week. But I liked AMAT for this possible run up to the all-time high. It did have some time left until their earnings come out. They don't come out until May 13th. So this was one of the few stocks that we could actually put a trade on that didn't have earnings literally coming out next week. So we'll see what the market does. If we get a decent, the plan for this trade really is if we start to get a decent push up here, I'm probably not going to try to wait for that all-time high before I take profit on it, because again, I mean, I would need it to close at expiration right here to get max profit, and the odds of that happening are so small that if we just get a decent push up towards that all-time high, we're going to go nice and green on the position. You can look at it on the risk graph, and let's assume, yeah, if we look at Monday or even Tuesday next week, if it pushes up to even 140, right, we'd be up about $380. So that's a nice little profit compared to our max profit at about $1,000. So if we push up towards 140 right in this area here, I think that'd be a good area to plan on taking profit. So that's that trade. That one's working well. We'll just let that play out into next week. Baidu's a trade that I just opened today. This is in my new taxable account that I opened here. This is a debit vertical spread. I saw a lot of call flow coming through on Baidu today on Flow Algo, but if you look at the technical chart, you can see here that it's trying to reclaim, it has reclaimed that 20 MA. So obviously it had this big down move. It's been consolidating, and it just kept holding and holding and holding that 200 level. So with the remount of the 20 MA right here, I felt it was worth to put a little bit of risk on with a debit spread, and see if we can't get a push up higher towards their earnings, which comes out, they're still a little ways away. They come out on May 17. So I'm in the May 14 expiration date, and I'm long the 225 call, and I'm short the 230 to complete the spread there. So if we can get a decent little push up, here in the next week or so, kind of heading into their earnings, the spread should give us a nice little profit. So this spread cost me a total of $184 to put it on. So in order to finance that, we'll just jump to this Goldman Sachs trade here. I put on a put vertical spread here for a credit. I collected $118, and if we look at this one, I'm in next week's expiration. I'm short the 330 put, and I'm long the 325 put. So not a very wide spread there. And again, with collecting, what was it? $118, that helps pay for some of that Baidu trade. The probability of profit on that trade was, let me see here for a second if I do a similar order. So probability of profit on that is 77%. Probability of 50% is 78%. And playing off the technical chart, that 330 level, if you look at that here, 330 comes in underneath of this low here, so kind of right here. So I'm remounted, and nice push up, strong move today in the financials. So obviously it's playing off of essentially today's low and the previous day's low. You can see where it's been basing in this area, and if we continue to push up here, this credit spread should pay out pretty nicely for us. The only catch again is that we have a lot of big earnings coming out next week that could be market moving events. So we'll see, but obviously this trade, the purpose of this trade is to finance the debit spread that I bought there on Baidu. So the last few ones here, Coin, this again is just kind of a long-term investment. I've only bought 3 shares of that new IPO. Obviously it's tanked quite a bit since that date, and that's fine. I've got $1,000 in it, so just going to sit tight on that one. If it wants to keep coming down, I'll buy some more at a lower price, but right now nothing to do with that one. This copper trade is like a poor man's covered call. So this is basically a covered call. If you're trading a stock, requires you to own 100 shares of the stock. But if you're trading something like Apple or even Amazon, that it would cost a lot of money to own 100 shares of. Another thing that you can do is buy an in the money call that is a long ways out to expiration, and then that would kind of mimic owning 100 shares of the stock, and then you could sell a covered call against it. So this one is the 22 call, 175 days to expiration, and then against that I'm selling the 26 call just to generate cash flow in that position. So this is obviously more of a long-term play, so just to help generate more cash flow for the account. And so right now, I mean, it's doing its job. There's not really much to say. Oh, I appreciate that, Snowman. Thanks. Yeah, there's not much to do with that one. Obviously, like I said, it's a long-term cash flowing position there that's working nicely. The last one here is our VIX position. This is meant to be just a hedge on the portfolio, anything that's long in the portfolio. If the market were to have some kind of a big crash, these contracts expire on July 21st. So this is a long vertical spread, a debit vertical spread, I should say. I bought 125 call, shorted 140 call. It cost a total of $205 to put this on. And if we look at it on the risk graph, you can see obviously if we were to see some big spike in volatility and volatility were to get back up to 40, right now we're down at 17.5. So, we'd have to see a significant crash in the market. But if that were to happen, this position would, expand very nicely. So it's meant to be a hedge. I'm not sure how well hedging works with VIX. I've heard, pros and cons of both of those. But I figured it only cost $205 to put it on. So might as well just give that a shot if we needed to rely on that. So that covers all the positions open here in Tastyworks. Like I said, right now with earnings coming out next week, I'm hesitant to really put on anything else. So next week's probably going to be a quiet week as far as trading in Tastyworks account, other than just managing what I have open here and possibly doing some more cash flowing with MES. I'm considering doing, like I was saying, I'm considering doing where I buy. So I'm long one contract of MES. I'm considering buying 9 more contracts and then shorting 1 contract of ES, the full E-mini, and those would completely balance each other out. The problem is that they're at different cost bases. So I don't know yet if I'm going to do that, but if I did do that, they would both balance each other out, and then I could cash flow both of those and theoretically generate over $1,000 a week in income on the cash flow. So that could be very nice to do that. So I'm still looking into doing that, but that's really kind of the plan going forward there. As far as day trading today, I really didn't take any trades. Actually, I just took it easy. I wasn't confident about what the market was going to do today. So let's go ahead and jump into our market analysis, and then we'll flip through stocks and see if there's any possible trade ideas to next week, or for next week rather. So let's switch over to our technical charts here. So taking a look at ES on our daily chart, right? I mean, yesterday it doesn't look so bad now, right? When we see this big drop, but it was pretty impressive to see that we rallied pretty big on Wednesday, and then we were doing great on Thursday until Biden came out with that announcement that they're talking about raising capital gains rates. But it sounds like it's only going to be on the wealthiest of Americans, so those making like over $1 million. But the market didn't like it and absolutely tanked. But it was noteworthy that we did not fall below the prior day's low or this low here, right? We actually put in a higher low. So that is noteworthy, something that I didn't really pay that much attention to, and I probably should have. And in the overnight session, you can see right here on the hourly chart yesterday, look at this huge drop when it happened. And then we just kind of traded sideways to up throughout the whole overnight session. And to me, this kind of felt like we were just bear flagging right here. Right? I mean, if this was just a knee-jerk reaction, I would have thought that we would have seen more of a retracement in the overnight session. And the fact that we didn't, I kind of felt like this was more bearish than bullish. Kind of like we were finding acceptance down here at these lower levels. We gave back all of that prior day, that huge rally from the prior day, which to me was bearish and not bullish. But the market just didn't care and just ripped faces off all day long. Really interesting if you look at the market internals, right? Just grab my drawing tools for you guys. So if you look at the market internals, I mean, the breadth for the New York Stock Exchange, for almost 5 to 1, 4 to 1 there, and for the Nasdaq 4 to 1. At one point, I think it was like 5 to 1. That's really bullish, right? And you can clearly see, I mean, there's a beautiful uptrend all day long, right? Beautiful uptrend all day long. The advanced decline line actually opened with a gap up and then traded higher and sideways for the rest of the day. And then on the Nasdaq, it opened with a small gap up, traded up higher, and then sideways for the rest of the day. So just all in all, very, very bullish. And then you look at your tick distribution, and this is something that the tick is more of a short-term indicator. So right out of the box, when the market opens first thing, right out of the gate, I should say, I'm looking at this and look at the bodies of the candles all above the zero line, right? So you see this tick, the distribution of all of these candles are all above the zero line. You're barely seeing any ticks falling below zero. That is noteworthy, right? That is significant. That's telling you that the majority of stocks are going up or trending up. And you can see that again, as we just saw in the breadth and the advanced decline line. So all morning long, we saw this tick distribution that was just hovering above zero. And it wasn't even until about lunchtime that we started to get a couple of candles getting below zero, but it didn't last very long. And then right here into the close, we got a strong negative tick here, just as probably just profit taking going right into the close into the weekend. So really strong tick distribution as well on the New York Stock Exchange, and pretty much the same thing on the Nasdaq as well. So this, to me, this confirms the bullishness in the market is still here, even with that negative news next week. Yesterday. And if we look at the daily chart, right, it just looks like it's just consolidating here, right? We had this big run up. It's consolidating, albeit with, a pretty volatile range of consolidation here, but it looks like it's just consolidating before another leg higher. So I honestly would not discount the likelihood that the market heads higher. Now, again, we do have those earnings coming out from big names: Apple, Facebook, Amazon, Google, Microsoft, Tesla. I'm sure I'm missing someone, but all of these big companies that have such a heavy weight in the index that if they're surprise miss and they really tank, which I doubt is going to be the case, but if they are, that's going to be an anchor for sure on the market because they are so heavily weighted in the index. But we have been seeing that other sectors like financials, industrials, basic materials have been really outperforming as the reopen trade, so to speak, has been playing out, right? Everyone has been banking on the economy really recovering and bouncing back as everyone gets vaccinated and everything gets back to opening up 100%. You can look at today. I'm just looking at my watch list here, and in terms of performance, financials, I believe, was the best. Financials 1.87%. It was actually over 2% at one point today. You've got basic materials 1.6%. Semiconductors up 1.8%. Technology, obviously a big weight in the index, up 1.5%. Healthcare still up a little over 0.5% there. So, I mean, everything is green except for your defensive consumer staples and utilities. So, again, that to me is bullish. If we were looking at possibly the market selling off, you would see your defensive sectors, your consumer staples and your utilities would be green, and everything else would be red, like we saw just a few days back when the market was selling off. So read into it what you will, but it certainly seems to me like the market still wants to go higher and is just brushing off the tax increases. So that's your S&P futures. If we take a look at the SPY chart, just because you guys are probably a little bit more familiar with that, obviously it's a similar story. We're holding the 9 EMA. We actually did just put in a new all-time high right into the close. You can see that hourly chart, just one last little push right up into the close before we pulled back. So coming into next week, I think the market's going to hold its breath for the earnings to come out, but unless there's some big surprise to the downside, I think things should hold up. So take a look at the Qs here for your NASDAQ, of course. This one is going to be more driven by tech, so this one's going to be a little bit more sensitive to what the earnings are coming out with Apple and all those other names. This was your prior all-time high that we've been pretty much trading through right now. So I'm at this point probably not going to put too much import into that level. I still have it marked, but it is kind of notable that the NASDAQ was not able to get up to its all-time high where the S&P 500 was. And I think part of that reason is because your stocks like the industrials that have been doing well, the financials, the basic materials, all of those sectors, stocks in those sectors are more heavily weighted, or there's more of them, I should say, in the S&P, where the NASDAQ is mostly like technology and growth names and things like that. So it is interesting that it wasn't able to get to its all-time high, but it still looks good. It's still over that prior all-time high and basically just consolidating up here, probably just resting, relaxing, waiting for those earnings to come out, possibly another leg higher. IWM, we were watching this one for a possible head and shoulders. I think everyone on the internet was. If you look around, everyone's been talking about it. These patterns aren't a sure thing. They can fail, but obviously here's your left shoulder, here's your head, here's your right shoulder, and right now it's coming up to test that right shoulder. If we start moving back up here in this area, right, if we start moving back up over here into this pocket, then that's going to completely negate that head and shoulders pattern. And I think that because so many people are looking at this as a possible head and shoulders pattern, obviously there's probably people in this that are short. And if we start seeing that move back up into this pocket, it could squeeze. It could definitely squeeze if there's a lot of people in that short. So food for thought on that one. But it looks, to me, it looks more bullish than it does bearish. But the pattern is still there. It's still intact so far. So right now, not much to do there unless it starts moving inside this pocket. Then we might be able to put on some kind of a vertical spread there. And play off of the all-time high. So we'll just monitor that. That might actually be a possible play for next week, given that we have earnings on all the FANG stocks and probably not going to be able to do much with those. So let's take a run through our favorite stocks, starting with Apple here. And if you guys have any questions, feel free to post them in the chat. I'll answer them for you. So on Apple here, obviously this one's going to be reporting next week. And what day are they reporting on? Let's take a look at this. So Apple is reporting on April 28th, which is Wednesday. So they're going to be reporting Wednesday after the close. So I'm still watching this 135.53 level. That's obviously the high from this run up here. There is, let me blow this up for you. So there is a pocket here. It's not a very big pocket, but there is a pocket here to work with up to that 137, call it 138, from this prior all-time high, this pivot high right there. So I was looking for Apple to move up toward that 138 level, and so far it hasn't been able to. Maybe it has one last gasp higher here before their earnings come out. That is a possibility. So I would probably be watching Apple just for a day trade next week to see if we can get inside this pocket and move back up to that 138. To the downside, I just don't like anything with that. It keeps holding the 9 EMA, and if it were to break these lows here, it could come down to the 20, but I would be more inclined to watch this pocket here. Again, all of these are just going to be day trades because they are going to be reporting earnings next week. AMD, I'm not sure if they report next week. I don't think they do. They do. April 27th for AMD. This one is still just kind of stuck in that range. It's still struggling with the 200 MA right there and the 50 MA as well. Maybe a little hard to see for you guys. There's your 200 MA. You actually have what's called the death cross here. I just noticed this. So when you have that 50 MA crossing underneath of that 200 MA, it's called the death cross, and that's usually not good. That's usually seen as a bearish indicator. So, you know, we'll see what AMD does. Obviously, their earnings report could blow all of that out of the water, but that is interesting. We're starting to see that death cross occur right there on AMD. With this one, honestly, I'm probably not going to be trading it. I mean, you've got a clear resistance here, and then clear resistance here, and then probably a run up to 87 area here where the 100 MA is. So maybe something to do with AMD inside of this pocket, but it's going to need clear momentum to do anything with it. And right now, I'm not interested in the chart, so probably wouldn't be trading that one. Amazon is another one that's going to be reporting. It's already had a big run up. I've readjusted this trend line. Previously, we had it drawn like this. So it had a nice run up into this trend line. It is still obviously flirting with this trend line, rejected twice off of that 34.34 level today, came right up into the trend line. So I guess I'll leave the trend line like that because it still seems to be respecting it. With this one, again, I just don't see really much to do with this because to the downside, you have no room to work with. To the upside, you've got a small pocket here, but this is Amazon. We're gonna need something substantial to really work with this one. So just don't see anything to do there. Boeing is another one that is reporting next week. Again, here, I just don't see anything here, guys. It's stuck right here underneath all this supply with the moving averages here. You've got the 100 MA right down here. It's just right here in the middle of this range. There's just nothing to do with Boeing. Let's take a look at Alibaba. Alibaba, same story, still stuck in this range. How long has it been stuck in this range? It's absolutely ridiculous. It still holds 220. Every time it comes down to that 220 level, it keeps holding. You can see I have alert set there. And I used to have an alert set up here, but honestly, it still has so much overhead supply that there's just really nothing to do with this stock either. And do they report next week? No, they don't report until May 28th. So unfortunately, this is a stock that's not reporting next week, so we could put on some kind of a trade with this, but I just don't like the chart. There's nothing to do with that. Here's Baidu. We just talked about that. The position that I have open, you can see that it is reclaiming that 20 EMA. You've got the 9 EMA that's coming up, curling back up, trying to cross back over the 20. So we'll see. Overhead, there is this 230 level. You can see I've got that alert set right there at 230. I think that's going to be a significant level for Baidu to reclaim. And then you've got a pocket to work with here up to the 50 MA. So that's a possibility right there. Just seeing this as well, you've got that 100 MA kind of coming across right there. So 230, I think, is probably going to be the key for Baidu. Let me just take a look at that position real quick. Let's hop back over here. So if we look at the risk graph on this, and let's say next week, what is today, and switch it to Tuesday. So on Tuesday next week, right? So if Baidu were to push up to 230 into that resistance level that we were just looking at, Baidu, this position that I have open here would be up about 84 bucks. So that's not bad. That would be about, what is that, about a 30% roughly return. So that might be something worth looking at taking profit right there into the 230. So that I would probably do that depending on obviously momentum and what the stock is doing. But clear resistance there at 230, worth a shot. It might make that run up, and hopefully that's what happens with this position. So that looks good. Let's go back over to eSignal. All right, so that's Baidu. Keep 230 on watch. Let's see what it does there. And they report on May 17th, so they still have a little ways away. Facebook reports next week. They report on April 28th as well. Been watching this 297.38, posted about it this morning in the chat room. Just couldn't break below it. It still keeps holding it. You can see that obviously it is being rejected by the 9 EMA, but if we start to remount that 9 EMA and start to move back up inside this pocket, there's something to do here with Facebook. So maybe it has a run back up to all-time high before the earnings, maybe. For me, I think I'd want to see it over this 304.67 level to get inside of this pocket right here, and then see if we can't run up to all-time high. So those are the levels I'd watch right there on Facebook. 304.67 to the upside, and to the downside, this 297.38 comes in from this pivot here, but you've also got this low of day from 2 days ago on Thursday. So really kind of 296. So if Facebook starts confirming underneath of 296 with momentum, there could be a short inside of this pocket. To the upside, needs to reclaim 304.67. So Facebook might be worth a watch. Right now there's nothing to do with it, but let's see if we can't get a day trade out of it next week. MU, my buddy Moses seems to love trading this stock. I haven't traded it in ages. Maybe I should look into it, but he seems to be killing it on this thing. Right now it still has not tested its all-time high that technically goes all the way back to 2000, I think, if you can believe it or not. Yeah. Goes all the way back here, July of 2000. Really incredible. So it's taken over 20 years to get back up there. So right now I just don't see a lot to do with this. Obviously it's below the 9 EMA. It's coming up to the 100 EMA. So it's kind of right here in this range. It would need to reclaim all of these moving averages to start moving back to all-time high for the long. There is a macro trend right here, though. If it does come down into this trend, that might be worth a look for a possible buy. Here's your macro trend. Comes in from February of 2020. Caught support here. Resistance here, support here. And we really haven't come back down to test it since this back here. So if we were to fall down into this macro trend, which right now is around $80 or so, $81, that might be a buy right there for MU as well. That would also be lining up nicely with this pivot support right there. So you can see that right there, right? So that's a nice support level. That's where we had a pullback low, caught support, and then rallied back higher. So that 80.49 level lining up very nicely with that macro trend. So that might be a good potential buy zone for MU to keep an eye. You know what? I'm going to set an alert right there. Let's set an alert right there. All right, so that's done. Netflix. Now this is one that we might want to keep an eye on. This one already reported their earnings, and obviously it was bad. They were down on their subscriber count, I believe, like the worst it had been in a long time. And what's interesting is we talked about in one of the previous watch list videos that we had this this big macro trend here that goes all the way back to June of 2018, right? So you can see where the trend starts. It's anchored here, and all of this price action is sitting on top of that macro trend. So that's very significant. But when we look at this, look where we went to, right? After earnings came out, it came in just a little bit short, but it came right to that trend. I mean, absolutely beautiful. Buyer stepped in just ahead of that and bounced pretty hard off of that. So if Netflix were to come back down into that trend, that might be worth watching. But the fact that it obviously is still respecting it is noteworthy. And when we look at the daily chart again, you can see that we have this huge gap overhead. Now the problem is that in the middle of that gap, we have this congestion of moving averages. You've got your 9 EMA coming down. You've got your 100 SMA sitting in there. You've got your 50 SMA sitting in there, and you've got your 20 SMA. So just a lot of overhead supply with these moving averages sitting right inside of this gap. Let's go ahead and mark the gap though. So there's your gap bottom. There's your gap top. So that's probably what I'd be looking for. Let's get rid of this line. We don't need that one. Trying to decide if I want to leave this 518 line. I don't think I'm going to leave this on there. Let's get rid of this one too. All right, so that's what I'd be looking for. You've got a gap here on Netflix, but again, I just don't like that you have all these moving averages in the middle of it. So we'll see. Every time it comes down, you can see here it keeps getting bought up. So right now it's just digesting this gap lower. As long as these lows continue to hold, I would probably just set an alert right here, just inside that gap. Right? So if it starts to move inside this gap, there could be a trade here for a gap fill. I don't know if it will fill the entire gap, but if we do a fib on this, 50% is going to be 530.50. So maybe right in here. So this is the gap that I'd be looking for, and that brings you right into your moving averages. So there's potential there for Netflix. Just set an alert, see if it starts moving inside that gap, and we could get a trade on that one. Maybe not next week, who knows, but it's worth setting an alert and just watching. Neo, I missed this one actually remounting the 9 and the 20. Zooming in on this, you can see how the 9 is curling back up over the 20, and they're starting to point back upwards, so that's good. It did hold that 200 MA right here. What's the only thing is I've been really kind of harping on this 42.23 level, talking about how I wanted to see it get back above this because you had a nice pocket to work with here. Unfortunately, since then, the 50 MA has come down inside of that pocket. So now you're going to have this confluence of overhead supply here with this 42.23 and that 50 MA. So I think for Neo, it's going to have to remount this 42.23 and that 50 MA. If it can do that, then you will have this pocket here to work with again. So I've got my alert there ready to go. I'm probably going to move it up. Oops, nope, I didn't mean to do that. Hold on, let's see if I can grab that, just that alert there. There we go. All right, so I'm just going to move that alert up just a little bit over that 42.23, because if we come up, see tomorrow, or sorry, Monday, that would probably be right there. You're going to have that 50 MA pretty much lining up with that almost perfectly. So that looks good. If Neo can start moving inside this pocket with momentum, there could be a trade there. So let's see. We're going to be looking at possibility of Facebook. Let's see. Baidu. Netflix. And Neo so far. Okay, so there you go. That's what I'll look for on Neo. That's all I would look for. I don't really see much for the downside right now. NVDA. So NVIDIA, this is a prior all-time high. Trigger point here at 614.90. You can see where it's been rejecting it for 1, 2, 3 days now since it squeezed up into a new all-time high and pulled back down below it. I think that obviously if NVIDIA, I think NVIDIA still has some strength in it here. Again, we were talking about this just massive area of consolidation here on the daily chart where it did just absolutely nothing. If this starts to curl back up toward that all-time high, we could really see it move higher. Let's see when they are reporting. I don't think they report next week. Yeah, they don't report until May 26th. So we've got time on NVIDIA. So this could be one that we might be able to put a trade on. So we'll just write down NVIDIA. Again, so on NVIDIA, I want to see it reclaim basically 615. I want to see it get back inside this pocket for a move up to the all-time high. If it can do that, maybe we can put on some kind of a spread for that move to all-time high, and then maybe even a bonus if it wants to break out above that. So that one's worth watching over 615. It might not be ready yet, though, because look at your 20 MA. So your 20 MA is coming up right here. It might want to trade sideways for just a little bit longer and kind of let that 20 MA catch up to it. So maybe a couple more days of sideways, let that 20 MA catch up to it, and then it rallies. So that actually might be something I'd look for right there. So NVIDIA is worth watching. Square. I don't know when Square reports. Square reports the week after next on May 6th. This one I see nothing to do with until it gets back above 255, 256. So we'll just set an alert right there. So if Square can get back above 256, maybe something inside of this pocket here. But it is notable that Square put in a lower high, right? It wasn't able to come up and test the all-time high. Doesn't mean that it's done. Doesn't mean that it won't. But right now it is holding all of this moving average support right here. So if it continues to hold this and starts moving back up over that 256 level, maybe there's something to do with it inside of this pocket for a run back to all-time high. That one still has, like I said, week after next until earnings. They report on May 6th. I'm not in love with it, so I'm not really going to make a note on it, but I've got an alert set in case it wants to move inside that pocket there. Last on our list of favorite stocks is Tesla. So this one does report next week. Reports on April 26th. So, wow. So you have literally Apple reports on the 28th. Tesla reports, which is Wednesday. Tesla reports on the 26th, which is Monday. Well, that's good. So at least Tesla reports Monday. So we'll have the rest of the week to possibly trade it. So for Tesla, really, I'm just going to wait for the earnings to come out because right now it's obviously stuck in between you've got all of this overhead resistance and then you have all of these moving averages below it. So right now I just don't see anything to do with Tesla, unfortunately. Thankfully, I got a nice trade on it this week, so that was good. So that's all of our favorite stocks. Do you guys have any stocks you want me to look at for you or anything like that? And I guess while you consider if there's anything you want me to look at, I'll show you this. So you guys know that I just released my day trading journal. If you don't, I posted a video on my channel, so be sure and check that out. You can get that journal totally free, and the video was a rather lengthy video, walks you through the entire journal, how to use it, and all that good stuff. This is one I created for my swing trading for Tastyworks. This does not include 0 DTE trades. So this is literally just swing trades or cash flowing positions. And I have 2 accounts now at Tastyworks. One of them is actually a Roth IRA, which this account is tracking here. And then I just opened up a taxable account as well. And the reason I did that really is because if you guys aren't familiar with wash sale rules and how they work between a taxable account and a retirement account, for those of you guys in the U.S., basically what a wash sale is if you buy a stock, for example, and then you sell it for a loss, and then you turn around and buy that stock again within 30 days after the date that you sold it, then you create a wash sale, right? So you are not able to write off the loss from the first trade that you took, but you can roll it. You can basically roll it forward. Your cost basis gets updated, and you can continue to roll it forward. But the problem here is that if you trade the same stocks in a taxable account and a retirement account, you can permanently lose losses to that wash sale rule, which basically means that if I were to, for example, buy shares of Apple in my taxable account, and then I sold them for a loss, and then I turned around and bought shares in my retirement account on Apple, then that loss that I took on Apple in my taxable account could not be written off, right? The only way, as I understand it, the only way you could write that loss off is if I went back into my taxable account and bought Apple again before 30 days goes by. So it can get really convoluted and confusing when you're dealing with wash sale rules, especially between taxable accounts and retirement accounts. So what I try to do, and the purpose of doing this was the stocks that I day trade all the time in my Lightspeed account, which of course you guys know are Apple, Tesla, AMD, Facebook, etc. The FANG stocks essentially. Those stocks that I like to day trade options on in my Lightspeed account, I never trade in my retirement accounts. So I never have to really worry about that wash sale rule. So I created the second Tastyworks account, which is a taxable account, so that I could also trade those stocks with like spreads and things like that. And I could continue to day trade them in my Lightspeed account. So this is just looking at the again the spread trades that I put on with my Roth IRA and Tastyworks, and so far I'm doing pretty well with it. Obviously, I do have some open positions here that obviously we don't have in the journal yet as far as P&L. One of them is here. One of them is the corn futures trade, right? So this one is currently open, and that's one that we're down on right now. That's one that we're currently down $209. Our total risk on that, again, was, since we made that adjustment, was 300 and something. Well, to the upside, max loss at expiration is 387.50, and to the downside, max loss is $1,137.50. But obviously, with corn futures trading here, it'd have to come all the way back down here, which seems pretty much unlikely. So obviously we haven't logged that in yet, so that would affect our results. But I'm going to really try to work this trade and at least get out of it to break even. The problem with options on futures is that the commissions are so expensive. I think it is like $2.50 a contract with options on futures. It's ridiculous. So after fees and commissions, it's going to be really hard, I think, to have a break-even trade on the corn futures. So we'll see what happens. I'll, of course, keep you guys posted with those adjustments. But yeah, this is the journal that I was working on for the swing trades. It's just a really super basic journal that allows me to track the performance of the trades and not so much every single detail of the trade. For example, what I paid on every single entry and exit and all that good stuff. If you guys are interested in this, let me know. I'll put a link in the description so you guys can get this one too. So that's what it looks like there. What else was I going to go over with you? So we did the market analysis. We looked at the internals. Oh, market profile. I knew I was forgetting something. All right, so here is your market profile for the S&P futures. So we did put in a new all-time high, right? Grab my drawing tools here for you. So we did put in a new all-time high. Prior all-time high was from this day here, which was April 16. So today we actually squeezed up over that and just put in a new all-time high. So I need to update that chart. Let's get rid of that. And we'll come in here. There we go. All right, so there's our new all-time high. Now, below us, we talked about the fact that we left a lot of poor structure behind. So let's just zoom out on this, and you can see that there still is a lot of poor structure behind because we really didn't pull back very much, right? So here's our run higher, right? And then we had this pullback here for 2 days. We rallied, right? The next day. We rallied the next day here. And then Biden came out and pulled the Trump on us and totally tanked the market. And then today we rallied all the way back up. So we really didn't come down very far to really repair any of the poor structure or a significant amount of the poor structure we left behind. So in terms of poor structure, we have, now this is a new virgin point of control, but if we come down lower, you can see that we have lots of virgin points of control that are stacking up. A virgin point of control is basically, it's an untested volume point of control from a prior day. For example, here you can see this was the most volume traded on this day. That was on April 9th. And since April 9th, we have never come back down to that level to test that volume point of control. So it is a virgin point of control. But looking down below us, you can see that here's a pretty prominent virgin point of control. It's also lining up with all of this balance from 3 days right here, right? So you have a point of control here, a point of control here, and this one here. They're all kind of lining up together where we had 3 days of balancing here. So that's noteworthy. That is where we kind of broke out from. As you can see from the chart here, we broke after 3 days of balancing, we broke out higher. So that was definitely a level that I'd pay attention to if the market were to ever come back down. Right now, it doesn't seem like that's going to happen, but we did leave below that some single prints, which is here when you have an area of single print distribution in the middle of the structure. So what this is telling me is that we spent almost no time right here. Each of these letters represents 30 minutes of time, and it starts with the letter B. So when the market opens, the market profile starts printing letter B's for the first 30 minutes, and then the next 30 minutes it starts printing the letter C, and so on. And so you can see that on that day after the market opened, we got into C period and promptly squeezed up higher into a new all-time high at that time, and then consolidated for a couple days. So we left behind some poor structure here. Also, I didn't mention, but right here today, just today, where are we? Here we go, right here. So here's today's distribution. You can see right here, we left a pretty big area of poor distribution there, where we just kind of shot right through it. So we're continuing to stack up areas of poor structure here in the market profile. So again, just kind of zooming out, panning down here. So there's a virgin point of control. There's another virgin point of control. Here's that poor distribution there. And then we have this massive gap here. Then we have another virgin point of control. We have a poor high here, which a poor high, poor low tends to want to be repaired at some point in the future. So it's noteworthy that we still have a poor high there, another virgin point of control. Here's a very prominent point of control, another one, and so on. So you can see that they're stacking up. Now, it doesn't mean that the market has to crash down just because we have a lot of them, but at some point in the future when the market does have some kind of a correction, these are all areas to pay attention to. So when we look at obviously the distribution today, as I said, here was what I was looking at this morning, right? So here is your overnight session, right? That was the overnight session after we had that big drop in the market the prior day. And I was looking at the fact that it was trading near the low, right? So you see from the prior day, let me get it all in frame for you guys. It's hard to see on this monitor. I usually have this on a vertical monitor, but so you can see here this was Thursday. This was Thursday's distribution, right? So what happened, right? The market opened and it just ripped faces off, right? We just ripped higher. And then Biden came out and said that he was going to increase capital gains taxes, and the market just tanked, just came all the way down. It ended up closing right here. This was the close for the futures, and you can see the overnight distribution was for the most part above the close, but it was in the lower portion of yesterday's distribution. So to me, especially because I showed you on the technical chart, it just looked like we were bear flagging. Really kind of was watching this halfway point, this halfback right there. If prices could not reclaim that halfway point right here as they did today, then that would definitely be bearish and I would be looking for the market to come lower. But once they did, that's when I started unwinding my hedges. I actually took a long position to make up for some of those hedges and ended up basically scratch at the end of the day. But the hedge was obviously in place in case the market really tanked, because I had no idea what that news was going to do to the market going into today, because obviously yesterday it didn't like it. So that was interesting. So I was leaning a little bit more bearish this morning, but obviously I was clearly wrong. I mean, you can see right from the open, we only dipped a little bit right here, 22 contracts traded at the low, and then boom, just shot off like a rocket. And we came up through the halfback right here like it was nothing, traded just above it, and then shot up even higher. Value area high from the prior day, barely stopped us there, kept going. And then we finally started to trade sideways in the afternoon, developed an area of value here. This is where we finally saw the distribution start to widen out after just basically going vertical all morning long. And then in the last little bit of the day, right into the close, we had this last squeeze up into a new all-time high. So we've come down quite a bit. The settlement is here. You can see where we settled. We settled quite a bit lower from the all-time high, but well over the balance of all of these prior days. So it still looks bullish to me, guys. Look at your NASDAQ profile real quick. And what did we do here? We have a nice excess high. We have a nice excess low, and it was pretty much the same situation where you have your overnight distribution right here in the lower part of the prior day's range. So I honestly thought that it would be, I thought it would be worse for the NASDAQ because the big tech names, especially, there's a lot of people that probably have years of unrealized gains in stocks like Amazon and Apple and all of those, and kind of felt like maybe they might start taking profits before the tax rate changes. So far, that certainly doesn't seem to be the case. Just a knee-jerk reaction on Thursday and bouncing up very strongly here. Our volume point of control did migrate higher on the NASDAQ, and on the S&P futures, it also migrated higher. So that's good. That's what we want to see. So not much there other than we're going to wait and see what earnings, what the earnings are when they come out next week on Apple and whatnot, and see how the market reacts. But otherwise, I think that's about all I have for you guys, unless you have any questions for me before we go. So the stocks that we went over that we're probably going to be watching for possible trades next week, probably mostly just day trades. Facebook, Baidu, Netflix, Neo, and NVDA. So that's about it. Oh, Apple. Sorry, I forgot about Apple. We'll see if Apple can move up over that 135.53. All right, guys. Well, I'm going to wrap it up there. I appreciate the few of you guys that showed up. I'm sure a lot of people are at work, so kind of hard to make it at this hour. If you're watching this after the fact, if you weren't here live, please post in the comments and let me know what time and what day even would be good for you guys to do this. Would it be better to do a live stream on the weekend, like maybe a Saturday afternoon or something, or Sunday maybe, like if we did it when the futures open Sunday, which is what is it, 6:30? I think futures open 6 or 6:30 Eastern time. So maybe something like that. Let me know in the comments below if you're watching the live stream after the fact, and we'll see if we can't pick a good time where more people can make it. So I will wrap it up there, guys. Thanks a lot for showing up, those of you that did, and I will see you guys in the next video. Hope you have a great weekend. Take care.